Good afternoon, everyone, and welcome to the FX Daily Roundup. And we've had quite a big day today with S&Ps coming off quite a bit here as Trump in Europe was basically, tweeting about, the China deal. And, by all accounts, I was talking about that actually before he even made the announcement in the European crossover webinar. And I was saying, there's no deal coming. You got to be smoking crack if you think there's a deal coming. And then about, we finished the webinar and about, it was like 20 minutes later, 25 minutes later, he says basically no deal's coming. But that's something that we've been talking about for some time. And now, we saw the market quickly react and continue to come under quite a bit of pressure here. We've come into a key area here in the S&Ps when I'm looking at the cash, but on the futures, it's going to be at 30.73. So we're going to see if the market can go on and hold this. It's key for on a daily closing basis. We are holding right now, holding at about 30.82 on the futures. We have run into a little bit of volume resistance at around 30.83. So you've seen this market kind of pare back just a bit. But certainly, like I said, under quite a bit of pressure as the market starts to go on and take into consideration, not consideration, but maybe we allocate as we start to look for a pretty decent pullback, in equities after the phenomenal run that they've had. And in light of that, we're seeing yields come off, quite a bit here also. You can see here, 30-year bond is actually come pretty close to getting to a very big key resistance, which on the 30-year bond, the March is 60.14. We did make it up to, I think it was 60.11. We turned back right now. We're 60.06. We've got some good support at 60.03, and looks like it's some decent, okay volume at 60.04. But the thought is, we may be, as the data that came out yesterday was poor data here in the States, or surprisingly poor data, I should say. And then, of course, there was the concerns yesterday about the potential trade deal not being done definitely this month. Now we're looking at Trump saying, hey, look, you know what, forget it. Maybe we'll just go on and wait till after the election. So it's really being pushed back, and now the market's going to have to reprice things. And if they do, then we're certainly looking for a correction in equities, and then also, some allocation into bonds with 10 years, 30 years, whatever the case may be. So we could see a sustained move. So just so be careful with that. Taking a look here with the on the currency page, we have seen the euro going to continue to move higher. We talked about the nice reversal that we saw on Friday. I was going to say phenomenal. It wasn't phenomenal. Although if you look at the range that we had all week long, you could almost say it was phenomenal. But we had dipped to new lows going, sub 110, got down to 982, and then closed the day above 110. And then yesterday we ran away with it. Well, once again, putting things in perspective, we certainly haven't seen the ranges in euro that we used to. Now, we did the bias chart analysis. In the European crossover webinar, we've got resistance at 1107, but we do have an interim target of 1154 that we're looking for a potential move in the euro. So potentially through this week, we can see it make a move to 1154 from a technical standpoint, but we do have some resistance today at 1107. Moving on, let's get back. So one of the things is we have seen the cable finally get above this huge pivot of 2980. That goes back actually 18 months. This pivot we've had in there for a long time. We're actually finally getting above it. Next level that we're looking at is 3050. But if we do get this close and get two consecutive closes above 2980, it's really going to open the door for a move up to 3208. But for starters, up here at 3050, if we get two consecutive daily closes above 2980, would really send us on our way to 3208. Taking a look at the Aussie dollar, we've seen this market move, and this was another interesting market. When we looked at Friday's close, we had actually closed below this key area here, 62.72. And look, we're going to extend this leg lower. Instead, we reversed on Monday, and then we had RBA, and they held rates, and we saw another push even higher. We'll see what we can do from here, but like I said, technically, this market looks like it could go and make a move up in here to 69.14. That's what it looks like it's going to go. Once again, this probably trapped some bears in here. We came up here, and then we added the move today, so we'll see what happens. But it opens potentially a move to 69.14. Another pair here is the dollar CAD. Interesting in that Friday, the same thing. It looked like we had a gravestone doji. We'd make a move lower. We turn around and reverse this yesterday, and we're kind of middle of the road in it right now. The resistance has pretty much stayed in place. That's going to be 33.36. If we can get a daily close above 33.36, not saying a whole lot, but it does offer an opportunity to make a move up here to 34.15. So that's the take on the dollar CAD. And looking here with the dollar peso, we've been pretty much capped with the bias chart resistance we've had for the last few days, which is 1962. And after all this movement, when we broke below the pivot of 1923.6, stayed there for over a couple of weeks, maybe 2.5 weeks, got above it, fell back, made a run up here. And we haven't been able to get past 1962. If we can, it's going to open the door for a move quickly to 1982. Not saying a whole lot, doesn't offer a whole lot, but we're starting to move higher. Bias chart support on the down, so it's going to be 1942. And then we'll go and move on to the dollar yen.
Some more context from Kurt's comments. The euro area needs a con just monetary policy and prevent a pro-cyclical tightening.
Okay, so on the dollar yen, we were able to get above that pivot 927 on the Friday's close, and we're going to see how far could this market go. Now, one of the announcements that we had from the weekend was a daily close below 927 would open the door for a move to 851. Well, yesterday we got that close below 927, and lo and behold, we made it to 851. So just so like plain old technicals, that's it. Just going across the levels and touches, and basically that's pretty much most of my work. Also combining some Fibonacci, but that's why lots of people say, hey, why you put them the levels, these prices, why not the high, the low? Like I said, how many people sold the high? How many people bought the low? So I put them across the body touches. That's where you're going to see the most volume. We don't have volume per se that we can use in cash Forex. So like I said, I was looking for a daily close. If we did get a daily close below 927, we were looking for a move down here to 851. We got the 851 today. So I'm not sure how much further we're going to go on a push on this. Taking a look here with the cash dollar index. Well, we did go and see a bit of a gravestone doji on Friday, and we saw a continuation yesterday. Obviously, trying to think of the right word, but generated by what we saw with Trump basically saying yesterday wasn't a likelihood they were going to try to deal. Now he's even pressed it even harder, saying, hey, you know what, forget it. Probably won't even do it till after the election. And obviously he's going to spin it the way he can. Now he says that the reason he won't do it because he wants a good deal. Well, you know what? He's not running the show. China's running the show, and he hasn't got the calls. He mentioned about getting calls from China yesterday and today. Once again, one of the things that was a big deal to me yesterday, and when I thought we'd see these markets move lower, was when Brazil announced that big, huge soybean meal deal with China, which basically left the American farmers with empty pockets. But my thought was, hey, you don't make that kind of announcement if you're on the precipice of a deal. So I knew that there was no deal coming, and so that really started to mess things up. And then Trump started tweeting whatever, and he mentioned about getting phone calls. He's not getting any calls from China. Like I said, the only calls he's getting from China is saying we're not going to do the deal. So he's spinning it his way, saying, well, he doesn't want the deal because he wants a good deal. Well, like I said, the thing is, whatever side of the political spectrum you're on, it doesn't matter. We're not here to talk about politics. But the point is now the market needs to go and reprice what those risks are. And obviously that would suggest a pullback here in the S&Ps because we've had a pretty phenomenal run. Look at that. So we've just barely scratched the surface here. but it's important that we hold 3073 on a daily basis. We've seen gold kind of take up and move off. Now it hasn't gone gangbusters, but we have moved higher here in gold right now. I think they've got some resistance around 1485 here. Also, as I mentioned here on the bonds, we've certainly gone to move lower in the yields. I'm pretty much just focused just on the futures, and as I mentioned, key resistance level at 60.14. We haven't got there yet. We got there to 60.11, and we do actually have a level there at 60.09, but key level is going to be 60.14 on the 30-year bonds, which I like, as opposed to one I follow, as opposed to the 10-year, although most people follow the 10-year. Crude, not really paying that much attention to crude lately, because like I said, the whipsaws, we kept going for about well over 2 weeks. I showed it on the screen before. You look at a daily, you find one day, up, finishing to the upside, the very next day down, finishing to the downside, and the next day up, finishing the ups, and it was just, like I said, wasn't making a whole lot of sense. And I think it's starting to trade a little bit better, but there's a whole lot more opportunities, whether it's going to be in, S&Ps, or we're starting to see the FX currencies starting to go in and open up a little bit. And obviously, you can always move into gold. But like I said, key thing is going to be for the S&Ps to go and hold this 3073 for today on a daily close. If we don't hold that, then it's going to be bad news. I think eventually we'll probably eventually take that up, but maybe we can see a little bit of a bounce, because we have come off quite a bit in just 2 days. So maybe we kind of moderate, and maybe a route out. If we're able to rally, initial resistance levels you'd be looking at is 3102 and 3109 on S&P futures. That's all we got. Thanks for joining us here on the FX Daily Wrap-Up, brought to you by ForexAnalytix. And want to go on and mention that we are having the Cyber Week offer, which is buy 1 month, get 1 month free, have access to all the systems, all the analysis, harmonics, L8 wave, basic technical, but also you have access to the chat room. A lot of good traders in there. We share the ideas, and I think, to me, that's a real strength. But buy 1 month, get 1 month free. We are starting to see volatility start to light up, and even becoming right now into Forex too. So consider that offer. Great offer. Like I said, buy 1 month, get 1 month free. Thanks again. We'll catch you tomorrow.